Hi everyone, let's cover my Elliott Wave analysis on Doge on the monthly and the weekly time frame, and I also shortly want to cover something on a 4-hour time frame. So here on the monthly time frame, the probabilities are highest to still see another all-time high, and initially it's good to look for a 5-wave structure, 1, 2, 3, 4, finish wave 5, and then look for a retracement. Now, your most bullish alternative scenario is counting this as a multi-1-2, 1-2-1-2, and look for a very large wave 3 to the upside, which is absolutely a possibility. However, I generally prefer to be more safe than sorry. So initially looking for a wave 5. And if all the signs as price is moving up are pointing towards a multi-1-2, I happily hold on for a longer period of time. Now, what we want to see in a multi-1-2, however, is price moving to the upside. So a couple of 1-2s eventually get a very large wave 3. So we want to maintain bullish market structure. And we also like volume to increase as price is moving towards the upside. What you want to see in a wave 5 is a 5-wave structure to finish and also create another high on then a lower amount of volume compared to your wave 3. Now, the invalidation for the scenario I have on my chart, like a regular impulse, is price moving to the downside, overlapping with the high of wave 1 at 0.0194. The invalidation for a multi-1-2 being a 1-2-1-2 and a large wave 3, officially here is the origin of your second wave 1 in that case, which is 0.0011. However, I think it becomes quite clear that if price would move towards the downside here, that is not great even for a multi-1-2. Now, if you then go to the weekly time frame, then your bullish scenario is a triangle in wave 4, followed by a multi-1-2. So this is your triangle where we then have to count this as a wave A, B, C, D, E. And then we have a 1, 2, 3, 4, 5 wave structure in 1, followed by our wave 2, another move up in wave 1, 5 waves, 3 waves 2, etc. Right? We're just looking for market structure to maintain itself. The invalidation is taking out this low at 0.0805. Of course, if this is the end of this wave 2, the invalidation moves up. But, right, we are still inside this range here. And as long as price is not significantly breaking out and moving to the upside, it's very much possible that this wave 2 is not yet finished. You look for a larger structure and continuation to the upside at a later stage. Now, what is interesting about this triangle, though, is the size of your wave A here. Look at how large your wave A is compared to, let's say, your wave D and your wave E, which is just a handful of candles. Your wave A is absolutely massive in size. So that is not too great for the triangle, that there is such a big difference between the waves. And also, preferably in a triangle, let me actually label it just for the sake of clarity, right? This is then your triangle. The most common targets for a triangle, right, for the subwaves, I should say, of a triangle is around the 0.5, the golden pocket, and the 786. And of course, your wave B is very shallow, right? We take a fib from the start to the end of wave A, and it did not touch the 0.5. It touched the 0.382, but not the 0.5 golden pocket or 786. So something to at least keep in mind. But the only way for me to count a bullish scenario here is to have a triangle inside wave 4. And after a triangle, you would expect price to then continue and take out the all-time high. There is not really any other structure that I can finish at this particular low, which is a must, because you have to start the 1-2s at these lows. We cannot start it here because this is quite clearly a 3-wave to the upside, not a 5-wave. And what we want to see is 5-wave structures up, 3-wave structures to the downside. So pretty much a triangle, therefore, is the only option. And the invalidation is, of course, for this scenario, very, very clear. Now, on the daily time frame, right, this move to the downside here could be your wave 2, right, a zigzag family structure. However, when we look at this first structure towards the upside, right, this then has to be a 5-wave motive wave. If this is the end of your wave 2, you want to see a 5-wave structure to the upside. Now, you might think 1, 2, 3, 4, 5, right? Ta-da! However, you have overlap here between your wave 1 and your wave 4, which is an invalidation for an impulse, 1, 2, 3, 4, 5. You don't want to see overlap, which means that you have to consider diagonals But if you consider a diagonal here, the only way to make this like valid is an expanding diagonal. And it has to be said that expanding diagonals are very rare structures, right? So that makes it a little bit questionable if this is indeed the end of your wave 2, or you're still looking at a bit of a larger corrective structure in this bullish scenario. Now, in your bearish scenario, you're basically covering a larger range, which is like Ethereum-esque, if I should say it like this, right? It's a large sideways structure, right? Where you then have your wave W being a zigzag structure, right? Then internally inside your wave X, we then have to count a double zigzag. There's not really any other option because wave W has to end here. You can't have a triangle inside a wave W, nor can you have a triangle in wave A of a flat. So we have to end something here, right? Which then has to be counted as a W because for a flat, price did not move high enough. We didn't move to the 0.9 Fibonacci, which you take from the start to the end of W, toggle on the 0.9, which is not touched. So at the moment, a WXY would be the only relevant scenario, which then is your W, WXY double zigzag in your wave X, meaning ABC, correction, and then another ABC. So instead of a multi-1-2 here, this is counted as an A, B, and then a wave C. Now, because price in wave X moved to the upside and touched the 0.7 Fibonacci taken from the start to the end of your wave W, the probabilities decrease for a double zigzag, WXY, which is a sharp corrective structure, ABC. Then you get your wave X to the upside and another ABC. And the probabilities would increase for a more sideways corrective structure like we had on Ethereum, right? So you then have your W, you have your X, and on ETH we then had a flat ABC, which is very, very common for wave Y. If wave W is a zigzag structure, Y is most commonly a flat structure. But alternatively, it can turn into a triangle A, B, C, D, E, and then eventually move towards the upside. So this would extend the wave 4 on a monthly time frame, which, by the way, is not a problem. We have more than enough time, right? If we go back to the monthly here and we would take a fib time from the start to the end of 2 to the end of wave 3, toggle on the wave 4 fibs here, then, by the way, if you count the bullish scenario, then at least the triangle ended here after the 0.382, which is good, and also ended on top of the 1-to-1, which is also good, right? So the bullish scenario ending something here is absolutely valid. But if we would continue this range, right, before moving towards the upside at a later stage, we still have time. This is a 2 fib time, which is fine. The 3 fib time is sitting in November 2027, right? Even that is still okay. It's a long wait, but that is still fine. So we have a lot of time. And also if we would pull a channel from the start of 1 to the end of 2 to the end of wave 1, which is a base channel, right? 1, 2, 3, preferably 3 breaks out of the base channel, 4 comes back, and then you look for 5. We have enough space, right? You don't want to touch the lower trend line of the base channel, which is at the moment miles away from price action, right? So no problem at all. So of course we have the bullish scenario, we know the invalidation, and then we have the quote-unquote, I suppose, bearish scenario, which is a continuation of the range. But even in the bearish scenario, you do preferably take out this high first before at least, maybe at one day you take out these lows, but probabilities are low. You're going to take out these lows before at least taking out this high, because in a wave Y, you would look for a flat ABC, preferably take out the high, just like on Ethereum. And if you count a triangle, then it's a sideways structure, and then you move up later and still take out that particular high. And then we go to the 4-hour time frame. And I only want to cover this white line. So on my chart, right, 4-hour time frame, you can see a move down, sideways, move down, right? It definitely looks like a zigzag structure. But if you want like an extra confirmation, if price can take out this high, right, the probabilities significantly increase that this is a 3-wave zigzag structure, which probabilities are highest at the moment that it is because of the significant move towards the upside. Basically means probabilities are high to take out this high here at 0.29, basically, right? And if you take out this high, you basically confirm a 3-wave structure to the downside, and that confirmation then adds probabilities even more to taking out the high at 0.29. Does not mean that you can continue correcting here, because a zigzag ABC can be part of a larger corrective structure, right? WX and a wave Y, double zigzag, right? There's different structures, but your bias, right, your directional bias, meaning the most likely direction that price is going to go on the higher time frame, is taking out that high. And we shouldn't really care about all the local movements. Sure, if you're a scalper, you're going to care, right? But if we are, at the moment, I'm covering the high time frame, which is more interesting from maybe like a swing perspective, right? High time frame trading, the directional bias is highest for price to take out this high, as the probabilities are highest that this is a three-wave structure to the downside. And then unrelated to whatever happens here, the bias would be to taking out the high. Now that then brings me to the resistances and the supports, because if price would take out that high, then to the upside, actually let's start with the most interesting levels. To the upside, we have a couple of volume levels here, right? 0.33 to 0.38, right? It's an interesting area on the chart, definitely one to pay attention to. And then I open my horizontals, and then you see over here, right, the different levels. Feel free to copy them if you like them, right? Did I write something? Yeah, so this is a monthly order block. I thought so. So on a monthly time frame, I often get questions about order blocks as well. So let me shortly cover this one for the sake of education. So we have a large red candle to the downside, one candle here to the upside, followed by a big move. This is what you want to see. And then there's one green candle, maybe on your chart, on mine it's gray, of course. This then becomes an order block, right? So this area here is going to be an area of resistance. And it's not like this whole upper wick. It's mainly the candle body here. And then I also use the lower side, right? The wick at the bottom at the moment, because of course here we have a gap now, right? And if price fills the gap, being touching the low of this candle, it can act as resistance, okay? So basically that order block, right? And the gap fill starts at 0.3 to 0.33, okay? So this is, that's like an order block, but then on a monthly level. Okay, then we get to the probabilities, the conclusions on a monthly time frame. The probabilities are highest for the bulls. We're still looking for all-time highs to come, either a 5-wave structure or a multi-1-2 and a wave 3. I explained what we have to look for if we would consider a multi-1-2, but better safe than sorry. Initially, it's generally better to look for a wave 5. And if there are clear signs of a multi-1-2, we will adjust and, of course, look for much higher prices. On the weekly time frame, both the WXY and the multi-1-2 are actually looking good. We probably would need a bit more information to really digest which one is going on. But in both of these scenarios, you preferably take out this high here at, what is it, like 0.49, at least before even getting like significantly close or taking out these lows, right? The probabilities are highest in a WXY to look for a flat, which preferably takes out these highs anyway, right? You have your wave A, you get your B, you get your C. Take out the high is the highest probability for a flat, right? And then in a triangle, you would just go sideways and move up. And in the bullish scenario, guess what? You just move up and you don't want to take out the low. So initially, that's the bias that we have. And then if price takes out that high, we just got to see what price does at that moment in time. And on the 4-hour time frame, I explained the probabilities, explained the move to the downside locally and the relevance of the wide line. And the probabilities are higher to take out the high at 0.29. And then we got to be aware of the resistances here, starting at like 0.30 basically, right? So that being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.